As we have people join, I'll go ahead and get started with introduction. Thank you for joining our Funding Success SBA Insights for Financing in the Current Business Climate webinar. My name is Adrian Papa. I'm the Senior Vice President, Regional Sales Manager for California Bank and Trust, and part of my responsibilities is running the SBA department for our bank. I'm going to be the moderator and host today, and alongside me is one of my best friends at work, one of my colleagues, Justin Simpson, who is our SBA Administrator for our company. I'm going to hand it over to Justin to share a little bit about himself before I go through the agenda and topics.
Thank you, Adrian, and good morning, everybody. My name is Justin Simpson. I'm the Enterprise SBA Administrator for Zions Bancorporation. So I oversee all facets of our SBA loan program. And today we're going to talk about several topics that pertain to SBA. We want this to be an interactive dialogue. So as we're going through the presentation today, feel free to put questions in the chat as we're discussing items. We cover things kind of in general, but as you have more specific questions, we think that's a great opportunity for us to really dive in and talk. So with that, Adrian, are we ready to get started?
Yes. So to give people an idea what we'll be covering, and again, we encourage you to ask questions after each section, is we'll be covering specifically what is SBA, who's a good candidate. We'll be sharing best practices and information around business acquisitions and expansion. Our third topic, for those of you looking to request working capital loans, which is one of the highest requests we receive on a regular basis, we'll be covering that as well as debt refinancing. And then last but definitely not least, we'll also be covering, so what does the actual process look like? So starting with the first topic, Justin, share with us, what is SBA and who would be a good candidate for an SBA loan?
Yeah, so ultimately the Small Business Administration was created from the Small Business Act of 1953. And really the whole goal of Congress at that point in time was to help small businesses get access to capital to compete against larger corporations. So ultimately that's why it's called the Small Business Administration. It really focuses on those smaller size businesses. Ultimately, what the SBA loan program allows us as a lender to do is the SBA gives us a guarantee. So in other words, they insure a portion of the loan. So if the loan defaults, we're not taking the entire loss as a bank to encourage us as a bank to make loans that we may not otherwise make from a conventional basis. So some of the things that the SBA program allows you to benefit from are like longer loan terms, lower down payments, more flexible credit standards. Ultimately, when we think about who's a good candidate for SBA, there are a few eligibility requirements that start out of the gate. So for number one, it has to be a for-profit business. And the business has to not have access to be approved for a conventional loan. So ultimately, they can't be eligible to get a conventional loan to be eligible to get an SBA loan. All owners of 20% or greater of the business must be willing to provide a personal guarantee. So if you've got multiple owners in your business, each individual that owns 20% or greater must be willing to guarantee the loan. And then ultimately, the use of the funds must benefit the small business. So some of the things we really look at is there's job creation, growth of the business, continuing of the business or continuation, i.e. like we're going to talk about change of ownership transactions today. So ultimately, some of those common things that you might want to look at for using it is buying an existing business or expanding your existing business, purchasing real estate, purchasing equipment. Access to working capital is a really big one. So if you're a business that needs additional working capital, the SBA loan program is probably a really good fit there.
Great. Thank you for sharing that. When we think about who would be a good candidate, a lot of questions have come up. What if I'm not a U.S. citizen? Would I still have a way of getting an SBA loan, Justin?
Yeah, so there are a couple things that preclude some businesses or individuals or use of proceeds from being eligible. So today, the guideline is that the business has to be 100% owned by a U.S. citizen or U.S. national. The SBA does change the rules on requirements for citizenship or those that are lawfully permanent residents of our country. So today, everybody does have to be 100% U.S. citizen. Some of the other things that come up that would make a business ineligible, passive businesses. So we think about real estate investors, i.e. individuals who purchase and just rent real estate, considered a passive business. They would not be eligible. Speculative businesses that involve illegal activities, We get questions from time to time on marijuana businesses because states may make it legal, but it's still not legal federally. So that would make that type of business ineligible, as well as many that are focused on lending or gambling. And then, of course, nonprofits, since you have to be a for-profit business.
Thank you for sharing that. And then the last question on this that has come up is, what if I already had an SBA loan or currently have an SBA loan? Am I allowed to have more than one?
Absolutely. Right now, the limit for SBA lending is $5 million with a guarantee. So the SBA's portion that they guarantee of $3,750,000. So that's the limit. So, if you were getting, say, $500,000 SBA loans, that means you could technically get 10 different SBA loans over a period of time, or it could be that you have multiple businesses. And so the SBA would look at that combined amount of the borrowing entity together with any of its affiliates. So those would be affiliates with common ownership, generally in the same three-digit NAICS code sector. So yes, even if you already have an SBA loan, if you went to the SBA, let's say during the pandemic, and maybe you got a PPP loan that was forgiven, or you got an EIDL loan and economic injury disaster loan that you may still be paying on because they provided some really great terms, you could still be eligible for getting another SBA loan up to the limit that's allowed by the program.
Thank you for sharing, Justin. I'd like to open it up to the audience. If you have a question, we'd love to hear. If you have questions specifically around what is SBA, what are SBA loans for, who would be a candidate, would I be eligible, please feel free to put it in the chat. We'll give it about 20 seconds to see if there are any questions. Thank you, Ms. Latrice, for thanking us. If we don't have any questions on this first topic, okay, give me 1 second. It says, my question is around startup funding. Okay, can you go ahead and ask us what that question is on the chat? If you could write it out, Latrice.
And Adrian, while she's doing that, let's just take a minute to talk about startup funding. So SBA loan program is the best program for somebody who wants to start a business. So when you think about kind of the requirements for, getting startup funding, depending on your loan amount is going to, kind of increase the standard of the requirements that you're going to have. So the first thing you're going to want to do is start with your business plan. So put together a good, robust business plan. The SBA has a couple examples on their website. They've got a short form business plan for maybe a smaller loan, and we would consider a smaller loan underneath the SBA small program at about $350 or less. If you're looking for something larger than that, you probably want to go with the more robust business plan. And like I said, SBA's got a good template example on its website. The other thing you're going to need to put together is projections. And the SBA requirement for projections is you have to put together 2 years of projections. The first year must be broken out by month. And so ultimately you need to, show what your anticipated, revenue is going to be, your expenses, your net profit. And then generally speaking, on a standard 7A loan, the SBA requires that we show that you're going to be profitable by the end of year 2. So you don't have to be profitable right out of the gate. Right? One of the things that we're going to evaluate as part of your SBA loan is to make sure you have enough working capital so that if you're running, in the red for, several months, maybe even up to a year, that you've got enough working capital to cover, those losses before the business starts making money. Now, if you've got a business idea that'll start making money sooner, that's even better. That's great. But that's really how the SBA will calculate and look at that piece.
Thank you, Justin and Latrice. We hope that provided you some additional color around that topic. And again, if you have any other questions, you can put it in the chat, as well as anybody else in the audience. Moving to our next topic, Justin, a lot of folks are looking to either acquire a business because they don't necessarily want to start one from scratch, or they have an existing business and they want to expand to new locations, new product lines, new services. What are some things that business owners should be thinking about before they start shelling out money to acquire a business, or before they start looking into financing to expand their markets or products or services?
Yeah, business acquisitions and changes of ownership are really big today, especially when you think about, the number of baby boomers who are retiring these days and the businesses that they own. So we are seeing a lot of requests for business acquisitions. So first thing we're going to talk about is what we call a complete change of ownership. So that means all of the existing owners are leaving the business and it's all new owners coming in. In that case, the first thing you want to be aware of is the SBA is going to require that you're going to make a 10% down payment or inject 10% of the total project to buy that business from your own proceeds. So on a complete change of ownership, there's no 100% financing. So you want to make sure that based on the value of that business you're going to pay, that you've got at least 10% to put into that business. Then, same thing. You might be thinking it's an established business. Do I really need a business plan? But it's encouraged that you would still kind of evaluate the business that you're going into. Because one of the things you really want to look at when you acquire a business is what additional working capital you're going to need to successfully run that business. Sometimes the seller might be taking the working capital that they had with them as part of the transaction. Sometimes they may be leaving in just a little bit. So you really want to do that analysis and understand what working capital you're going to need to do to be successful. And then you really start, depending on the business that you're buying, really evaluating, how that business is doing. Are the trends up? Are they down? Are they flat? What's the quality of financials the seller is going to provide to you so that you really understand the cash flow of that business? Because most business acquisitions are going to have some sort of unsecured exposure or what we call an airball, right? It's goodwill. It's an amount that's based on cash flow and not tangible collateral. And so really we want to make sure that the business that you're buying is going to value out and that you're going to get the cash flow that you expect from that business. The nice thing about SBA financing with a change of ownership is you get a 10-year loan. So it really gives you should be a good, comfortable payment to help with that business. And we find a lot of business owners that are going in actually can pay off their SBA loan faster. So it really makes it set up for them. So when they go into that business, they've got extra cash flow. The things that we're going to underwrite is we're really going to look at that business that you're purchasing. So we're going to underwrite the financials of the seller. What's the cash flow of that business? What's their customer concentrations? How much of the business is dependent on, a single owner or a single individual versus, say, some employees? We'll look at some industry trends and competitive threats, and then overall the quality of financial statements. So those are the things that you want to think about when you're looking to buy a business as you're putting together your business plan and deciding what business you'd like to buy. The second thing that we look at, our second half of your question, Adrian, is how about what we would call a partial change of ownership? Or a complete partner buyout. So a complete partner buyout means nobody new is joining the business. That means you've got more than one person who owns the business and they're going to buy out a partner. And those transactions, we can generally do 100% financing for most of those businesses. So you've already got your sufficient invested equity based on the fact that you're already an owner of the business, especially if you've been there for at least 24 months. So partner buyouts are great if you've got, one of your partners that wants to retire and be bought out of the business. And then we look at partial change of ownership. Sometimes we'll get an owner that just wants to decrease their ownership. They want to sell part of it. Maybe they want to sell part of it to a new person coming in. We see that with a lot of medical practices. You might have, 3 or 4 providers in the practice and one wants to retire and they want to replace with a new person. Again, in those partial change of ownership transactions, we can generally do 100% financing. So we've already got sufficient invested equity in that business from our existing owners. And so we really kind of follow the same guidelines of who's coming in.
Thank you, Justin. Really appreciate that and hope it provides some guidance to those in the audience of what to think about if you're looking to acquire a business, buy into a business, or maybe you're in a situation where you're buying out a partner. If you look at the question in the chat, Justin, Latrice's question is how does SBA treat when the actual business is considered a startup or not? Because in her case, there was delayed revenue due to the vetting process with the regional center, I believe.
Yeah, so that's a great question. So the definition that the SBA gives for what it considers to be a startup business is generating revenue for 12 months or less. So you think about the time that you're planning your business up until the point where you generate your first dollar of revenue, you technically haven't started your operation. So ultimately the SBA is going to look at that as a startup. So if you started your business, 10 months ago, we know that you're going to have some financial information from your first 6 months. What we'd want to see from a lender perspective is we'd want to see those financials that you have for your first 6 months, and then you'd go back to your projections. So again, you'd want to do 2 years of projections. You'll have a considerable advantage because you already have 6 months of history on your business. So you kind of have an idea of, what your revenue is looking like, how the business is growing, what your expenses are actually coming in at. And so ultimately, you should have a really good idea of what that looks like when you put together your projections. And we will rely more on your projections than the historical cash flow of that business where you have that short history. So that's where that key is really going to come in, is just looking at those projections in your business plan, and then learning from the history that you already have to make sure that those meet. The other thing we'll do with your projections is we will look at your NAICS code, so the sector that you're in, and what we do is we get what we call from RMA. We get a benchmark, and so it'll tell us all of the businesses that are in your industry around your same revenue target, and it'll show us, what their costs are, what their expenses are, what their net profit is. And so we'll compare kind of the industry average against what yours are to make sure that your projections are in line and something you'd be able to achieve as a business. So that's really what you're going to look at from a financial perspective, not necessarily what you've done for the last 6 months as much as what the outlook is for your business going forward.
Thank you for sharing that, Justin. Latrice, hopefully that answers your question. Even though your business was formally started previously, it'll still be treated as a startup if it only started to receive revenue. Another question in the chat coming from Adam is, coming from a self-financed business for the past 6 years, what are the requirements for an owner looking to grow and expand?
Yeah, I love that question, and congratulations for self-funding your business for the last 6 years. That's pretty impressive. Ultimately, with an SBA loan, one of the primary reasons that a borrower is eligible, that they can't get conventional financing, is a lack of collateral. So if you're looking to expand, perhaps you're looking to, hire new employees, maybe you need to change locations, if you want to, purchase real estate, or you want to go to a new place that might require tenant improvements, all of that is eligible for SBA financing, and it's done on a 10-year term. So as you're kind of putting together your request, look at what you really want to do to grow and expand. We are going to look at the historical cash flow of your business, but let's say you've got really large expansion plans and the historical cash flow of your business wouldn't support a new SBA loan. That's where the projections come in again. So what we would look at is, if your business doesn't historically cash flow to meet the growth that you're trying to achieve, then we'd ask for projections again, 2 years worth, with the first year broken out by month, to show us where you're going. And so we'll look at the story of your past as well as where you're going in your business plan, and that's how we ultimately underwrite and help provide you with the capital that you need to grow and expand your business. So our bankers absolutely love to talk with business owners who are looking to grow and expand, because those are fun conversations.
Yeah, I couldn't agree more with Justin. If you've done well over the last 6 years and you have good financials, then your business may be able to support that loan. And the great thing with SBA, in the event the goals you have require more capital than your business current supports, you'll have the ability to provide projection-based financials for us to review that. I'm going to go ahead and pause there and want to confirm with the audience what other questions you guys might have, specifically around business acquisition or expanding. I'll give it about 30 seconds before we move on to the next topic. And just like the other folks have, please just feel free to put your question in the chat, and Justin and I will answer them. While we're waiting for the questions to come through, the next topic is specifically around refinancing debt and working capital. As we know, many business owners have taken loans to fund their business, to finance their growth, to help with day-to-day expenses. And we've gotten a lot of inquiries, and we've helped a lot of folks with refinancing that debt to, a lot of times, a better term and a better payment and rate. And then for those of you for working capital, whether it's for inventory, expenses, equipment, payroll, marketing, that's probably the most common request we get as a bank. And Justin's going to go ahead and talk a little bit about those topics and some things you should think about when requesting a loan for it. Go for it, Justin.
All right. So yes, debt refinance is definitely a huge topic. The SBA loosened up its guidelines in 2023 for debt refinance. So a couple of key things that we see. Maybe you got a business loan a couple years ago, or you got, conventional loan to recently purchase equipment. Maybe it was on a 5-year term and you could benefit from having some increased cash flow. Great opportunity to refinance into an SBA loan, because if we can show that either your loan's on unreasonable terms, and that's defined by a balloon payment, or you think about revolving credit cards, high interest rates, it's automatically eligible. Or we just have to show that we can improve your payment and benefit your business by at least 10%, which you generally probably wouldn't be refinancing unless you were saving that money. So Gives you a great opportunity to look to refinance and restructure debt to free up cash flow. One of the key things that we see is a lot of business owners use their personal credit, i.e., like a personal credit card, to fund some of their business. If you're incurring some of that debt on behalf of your business, in order to be eligible for an SBA loan, that debt needs to be listed on your business balance sheet. You must report the interest of that on your business tax return, and the business must be making those payments. So if you're going to use access to your personal credit for your business, make sure the business is actually using that debt and making the payments on that debt, because that'll allow you in the future to make that eligible underneath an SBA loan. If you did a change of ownership transaction, maybe you did an SBA loan before and you want to refinance it, we can refinance other lenders' SBA loans to help with your cash flow. If you've got a seller carry note, sometimes when business acquisitions are financed by the seller and you want to get the seller paid off, have your own note we can do that with an SBA loan. So that gives an opportunity there. If you got some high interest rate debt, sometimes businesses might be in a somewhat desperate situation, and maybe they go to an online lender that's charging them a 20 or 30% interest rate. Even if you've done that recently, let's take a look at those, because if we can drop that down to a significantly lower interest rate, give you a longer term, it's probably going to benefit your business to be able to make a lower payment or just save money on interest and pay that loan off faster. So really, all those things are kind of key. The other thing I would remind you is if you got a loan that's coming up and that's going to have a balloon payment, or it's getting to the end of maturity, once that loan goes 30 days beyond maturity, it's no longer eligible. We have to get those loans refinanced before they go more than 29 days past maturity. So if you've got a loan that's coming up on maturity and you're not sure if you're going to be able to renew it with your existing lender, it's a great opportunity to start a conversation and get started on that earlier than later to make sure you can get it done while it's still eligible.
Thank you for sharing that, Justin. This has been asked in the past. What debt is no longer eligible of being refinanced? For example, MCA or factoring debt. Those are things that have come up in the past.
Yeah, so ultimately what Adrian means by MCA, so merchant cash advance, that might mean that you go to your credit card provider and you get an advance on that, and they're debiting you on a daily basis, sometimes weekly, for the payments off of your accounts receivable. Those debts are no longer eligible for the SBA. Or if you got a factoring facility, again, we can't refinance factoring. So really anything that's driven specifically off the direct payment of your ARs wouldn't be eligible. Now, if you've just got a line of credit that's secured with a UCC filing against your ARs, that is eligible. We're talking about those that where the provider of that is generally deducting money directly from your accounts receivable as it's coming in to make those payments, not you making your payment on a monthly basis.
Thank you, Justin. And then the last question around that, before we answer the question in the chat, is we often get, I'm looking for working capital. I didn't know how much to request, so I just requested the max amount. Can you give a best practice for business owners or prospective business owners of what they should consider a reasonable amount to request for working capital?
Yeah, it's a great question. So some business owners, when they hear working capital, they just think it's like a blank check. The SBA is a little more prescriptive of how we have to allocate what it's called its use of proceeds. So let's talk about what working capital is and what it isn't first. So working capital would be, your expenses for your day-to-day operations. So you think about your core ones like payroll, rent, utilities, maybe office supplies. Those are probably your most common ones. Marketing and advertising, if you've got, you pay for Google ads or something like that. Those are going to be kind of your day-to-day expenses that fit in working capital. What working capital is not intended to be used for is generally inventory, debt refinance, construction, purchasing equipment. Those are all eligible use of proceeds, but they have to be specifically spelled out in your loan to use them there. So when you think about working capital, really what you're going to look at is okay, I want to hire 3 new people. You look at that and you say, okay, how long will it take those 3 individuals to get ramped up to where they're producing enough revenue to pay for themselves? That's where you then determine how much working capital you need. Or for instance, if you're going into a new facility, you think, okay, I'm going to need 6 months of ramp up period. Then look at how much your rent and utilities are going to be for that 6-month period. And maybe that's what you're going to need for your working capital. Ultimately, when we're looking at working capital, especially if it's the majority of your loan, the SBA requires that we justify why you need that much in working capital. So those are some of the specific details we're going to look at. How many people are you going to hire? For how long do you need to pay them? What's that ramp up period? What's your average cost per employee there? with benefits and everything else included, what you might need for, rent or utilities, um, or any of those items. So ultimately, we do a lot of working capital loans, and that's really what your justification is going to be for why you need the working capital is just how it's going to be spent. And on most of those loans, we're going to put in a draw period. So you don't just get the money up front. Let's say you need a 6 month ramp up period. Most of our loans have a 6 month draw period. So you might be coming in once a month, taking a draw each month. That way you're not paying interest on the entire amount. What the funds might be sitting in your account. You can come in each month and say, I need to get a draw for my payroll this month. And we'll disperse funds to your account so you can make that payroll.
Thanks for sharing that. So I think the important part here is as you guys are putting together your financial plans and projections is to really make sure that you're thinking thoroughly about exactly what you need, when you're going to need it. And it's one of the reasons why working with an SBA business development officer in our team who has the experience of doing this for dozens and dozens of businesses. We do have a question in the chat. If they are a service-based business, whether they're contracted through government entities or government-backed entities or contracted groups, the revenue is typically delayed. The question they basically have is, for this type of business, what would be the best type of loan? A microloan, working capital loan, line of credit, or hybrid? I think I know my answer, but I'll let Justin share, and then I'll share my experience of financing these type of organizations.
Yeah, so ultimately that's kind of the perfect thing for an SBA loan, right? Is you're looking at, what your, cycle is on how long it takes to spend the money to make your payroll, to produce your product until you get paid, right? Kind of determining what that need is. There's a couple different avenues that you can look at. So the SBA does offer both lines of credit and term loans, and their term loans that we talk about are the ones that we do, a draw period where you can draw it up over a period of time. So really what we'd want to examine is do you need temporary working capital, meaning you're going to need the funds for a project, you complete the project, maybe you pay it back, then another project comes along and you want to draw it out again and reuse it. That's the perfect use for a line of credit, something that's going to be more revolving. We would consider that really your temporary working capital. Permanent working capital is where you're going to take the funds out, you're going to, spend it on a project, and you're always going to kind of have those ongoing expenses where you're going to need to keep the capital that comes back in and not necessarily pay back down the loan, but use it for your next project immediately or for your ongoing use. So in that case, if you're just looking, for your initial funding, let's say you've got 90 days with your delayed billing cycle, looking at your project and your expenses that go into that before you get your revenue, it might be good just to come in and get, a working capital term loan for that 90-day period that ultimately you can just then make payments over time. And so ultimately, once that loan's paid off, then the capital is just remaining in your account that you're fully funding your business in the future. So that's kind of my thought there, really depending on, if it's going to be short term, paid back, and then used again, line of credit option versus the working capital. And Adrian, SBA lines of credit are actually really great compared to a conventional line of credit. You want to share why those are so great?
Yeah, I think those are great because not only do you get a line of credit, but it's extremely flexible where you can choose the total term, whether you want it for 1 year, 2 year, 3 year, 4 year, 5 year, and then you can term it out at the end of it for the remainder of a 10-year balance. So depending on your business, especially if you have one that's never had a line of credit, using SBA to help build your business credit, get it reported to the different agencies, really helps your business build that credibility. But also to Justin's point, there are times where it's appropriate to get a loan, and there are times where it's more appropriate to get a line of credit because of seasonality or because of projects that are going to pay later. And specifically for these type of organizations that work with the regional center, whether it's occupational therapy, whether it's behavioral therapy, we've financed several different types of medical practices or behavioral services. Everything from as simple as I want to buy a book of business so I can provide my services to their clients. We've had it to where I need to buy a building for my psychiatric practice. And we've done projects where we're looking to build a huge behavioral center to serve a larger region. So the question, to answer that question is, it really just depends on what your project is. And when you tell us and share with us what you need, why you need it, when you'll get paid, when you'll grow the business, we'll be able to put together a recommendation for a specific product or multiple products to meet your needs. In terms of can we connect you directly to a lender or officer or partner organization, I'm proud to say at the end of this call, our marketing team will follow up with everybody through an email, and you can simply reply to it, submit your information, and one of our 8 business development officers for SBA here at our bank will reach out to you and talk to you about that. And again, our team has done several deals for different businesses that do work in this field, and I'm very familiar with it, and more than glad to help. In terms of partner organizations, in the event you weren't able to get approved to us for whatever reason or for whatever guidelines, we definitely do partner with other organizations. An example is I sit as a loan committee approver for a CDFI, and they do help those micro loans. So you can work with us. We're going to do everything we can to help you. And in the event somewhere else is a better fit, we also serve help, and I actually help approve loans, at other organizations. So thank you for that question. I'm going to go ahead and move into the next topic, and this is probably the most important one. Is Justin, so what is the actual process, and how long does it take to apply for a loan?
Great question, Adrian. So ultimately, where it starts is with meeting with one of our bankers. We actually have a digital application. So our digital application will ask questions and navigate you through to the best program, whether it's a conventional loan program or an SBA loan program, and direct you to the required documents. For instance, some of our SBA loan programs, like our small dollar loans, don't require financials. We work off a score based. Some of the larger programs that do require a cash flow will require financials, generally 3 years, or the time that the business has been in operation. So if you've been in operation less than 3 years, then you might be supplying 2 years or 1 year, whatever that might be. So all of that's captured in our digital application, which should hopefully make it easier to upload your documentation and go through that process. Once your applications get submitted, it goes through underwriting. We collect the minimum amount of information we need to make a credit decision to let you know whether your loan's approved or wouldn't be approved. Once your loan's approved, then we'll move into our due diligence phase, which is where we meet most of the SBA eligibility requirements. So we'll obtain all the additional requirements we need, like tax transcripts, business licenses, any injection requirements, and go through all of those. And then once that's completed, we submit to the SBA to get SBA approval, and then we go to closing. One of the benefits that we have is we are what's called a PLP lender. It's a preferred lender with SBA. About half of the SBA lenders that have done a loan this year are preferred lenders. That means that SBA trusts us enough to make a decision on your loan where they don't review any of your documentation. They rely on us to review it all and make the decision. So ultimately, when we submit the loan to the SBA, we're telling the SBA what we're doing on your behalf, and they give us a loan number associated with that loan for the approval. Then once you're gonna go through closing, and then once your loan's closed, if you have a draw period, meaning that your loan's not fully funded at closing because you're gonna take money over time, then it'll transition over to our portfolio management team. Throughout that entire process, you're still gonna work with the same banker. So they're gonna work with you. They're gonna be a relationship manager. They're gonna take care of any needs that you have for the duration that you have your time with the bank, through that draw process and everything. Now, based on the type of loan you're looking at, we've got lines of credit that go SBA that get done in weeks. We've got some small streamline loans that might go 45 days on average. If you get into a larger complex project, especially those that might have ground up construction or large construction components, depending on how long it takes to vet that and work with a general contractor to get all your construction budgets and things ironed out, you could see an SBA loan that might go, 4 to 6 months in the most extreme scenario of something that takes a long period of time. When you think about kind of core requirements, I would say that, your general business acquisitions, real estate purchases, and those items, if you're being really responsive, I would allow 60 to 90 days as kind of a good standard to have a good, comfortable closing.
And I would also like to add, it's important that as you're getting into your request, you start ideating and start thinking about it. And as soon as you know what you want to do, is connect with one of our bankers on our SBA team as soon as possible so that they can look at what your goals and timeline is and set realistic expectations to get your loan approved and funded in a timely manner. As a PLP lender, which Justin said, we have the ability, because the government trusts us and allows us to approve your loans on the credit side. But as you guys know, depending on the government, there could be shutdowns, there could be things going on. They still need to do their part. to issue their loan number to us so we can close on your loan. So the sooner you know what you want, what you need, and when you need it, connect with one of our bankers on the SBA side so they could make sure that your timelines align, not just with our approval, but with what we need to do with the government to make sure your loan funds. That also brings us to a couple different questions is after a loan is approved, there is additional due diligence done when the loan is reviewed by SBA. Can you remind the team again, I know you mentioned it briefly at the top of the call, what are some things that they should think of, whether it's idle, PPP, previous taxes owed? What are some things they should do for good housekeeping before they even submit their loan?
Yeah, so from time to time when we submit to the SBA, what the SBA is going to do is it's going to do its final eligibility check. So it's basically going to run the business and its owners through its records database searches. And what it's looking for is to make sure that you are haven't had any challenges or issues with other government programs, whether it's student loans, healthcare programs, um, defense or veterans affairs. And so they're just making sure that you don't have any past due amounts that might be due in any of those, including any other SBA loans. What we actually see from time to time is we see many borrowers who, got a PPP loan or got an EIDL loan from the SBA during the pandemic. And because those EIDL loans, the economic injury disaster loans, were pretty easy to get with the SBA, and I don't think they had payments for like 2 or 3 years. Some business owners forgot about them. And maybe they changed email addresses, didn't receive the contact from the SBA, and so some of those loans went into default and didn't get paid. So if you've done an SBA loan or you had student loans in the past that there were some challenges on, you want to double check the status on those up front and just make sure that if you had negotiated for, say, a settlement on something like that, there's not an outstanding balance that's still owed, because that would then hold up at the very end of the process when the SBA does its screening, specifically for other government debt that would require us to address it. The other thing that comes up in our process with due diligence is past due taxes. Sometimes we find business owners will file an extension in April but not pay their estimated taxes due. And then when they file before the April 15th deadline, they may pay their taxes and penalties, but sometimes they forget that there's interest and fees that gets added. And so sometimes we'll see some small amounts of taxes that are due. Those are generally pretty easy to get paid at the end of the process, but still may hold us up by a day or two. So again, if you're not one that pays your taxes on April 15th, but you generally pay when you file with an extension, you might just want to double check and make sure, that you're showing current on your taxes with the IRS. So those are two common things that can come up at the end of the process from time to time that we just have to work through when they exist.
Great. I have another question for you, Justin, but while we wait for that question, anybody in the audience, please put your questions in the chat for anything that you have on this topic, specifically the process, the different types of program, how to apply. Even if you have other questions from the previous topics, feel free to ask. But Justin, before I forget, one of the biggest questions we have is, how much does this cost? And I have my thoughts on that, but I'd love for you to share the formal response to that.
Yeah, so ultimately the biggest fee difference between a conventional loan and an SBA loan is the SBA guarantee fee. So based on your loan amount, the SBA requires us to collect a fee that goes to the SBA. This is what the SBA uses to cover its guarantee on loans that go into default. So on loans of 150,000 or less, the SBA charges a 2% guarantee fee. However, the SBA allows the lender to keep 25% of that fee. So for instance, us as a practice, we don't charge you a 2% fee. We only charge a 1.5%. We take the funds that the SBA says we can keep, and we let you keep those. On loan amounts of 150 up to 700,000, the fee is 3%, and above 750 up to $1 million, it's 3.5%, and above $1 million, it goes to 3.75% on a blended rate. So generally speaking, your small loans plan on 1.5%, your larger loans, 3 to 3.75%. Now, one of the benefits is the SBA does not allow a bank to charge an origination fee, just a packaging fee. We cap our packaging fee at $2,500, regardless of loan size. So if it's a small dollar loan, it'll be less. If you're doing a $5 million loan, it would only be $2,500. If you were going to get a conventional loan, oftentimes you might pay a 0.5% or a 1% origination fee. So when you look at some of those offsetting fees, Really it's about that guarantee fee is probably the biggest difference, but we'll save you a little bit in some of the other fees that might exist on the SBA loan.
And for those of you that are business owners that have gotten loans before, you know that an origination fee could be anywhere from 1 to 2, sometimes 3%. And if you're working with a broker, you could be paying another 1, 2, 3%. So working directly with a bank like ours here at California Bank and Trust, you're working directly with us, an SBA PLP lender that is going to work with you to get things done. If it's a smaller loan, you'll actually save compared to many lenders because we don't keep the fee that the government allows us to. We actually give it back so that way the customer benefits. The second thing is as your projects scale and they get larger, that's significant savings. If you do a $5 million project and are only paying $2,500 in origination, that is very minimal when you look at it. And let me just do the math real quick. That is, 5 basis points versus the typical conventional deal might cost 1 to 2% or 100 to 200 basis points. So just put that in perspective, because you also have some great prepayment terms or lack thereof, depending on the dollar amount and number of years the loan is. And you have a lot of flexibility working with our bank, which I'll talk about shortly. Some of the questions that came in the chat, Justin, from Janae is, are you referring to pass-through taxes for the business or individual when they do that search?
Good question. So primarily we're looking at the applicant, but let me just talk about what's defined as past due taxes. Let's say you got a large tax bill and you weren't able to pay it, but you set up a payment plan with the IRS. You are considered current on your taxes and you're going to be just fine. If you've got a tax bill that hasn't been set up on a payment plan and is still owed for the business, that's where it would need to be addressed. So if you know you've got some past due taxes owed to the IRS, one of the things you might do proactively on the front end is just reach out to the IRS, get yourself set up on a payment plan. From what I've seen from IRS payment plans, they're generally pretty decent, giving like a 6, 7, 8 year time period to pay that back. So that's all you'd need to do to address any past due taxes that might be owed by the applicant business.
Thanks for the question, Janae. Another question that we had, which was from Tati, was, are we only looking for A-type clients? What type of housekeeping with financials do you want to have reviewed prior to submitting the loan? I guess I can answer some of that. Specifically for California Bank and Trust, we look to work with clients who meet the requirements of the SBA and our own internal credit guidelines. The good news is if it is not a perfect client, let's say they don't have enough for the down payment, let's say it's a brand new business or restricted industry, let's say the experience they have is not perfect, those are all the reasons why our bank is able to still get many loans approved, because the SBA allows us to have that guarantee, which allows us to approve more loans. So just because it's not A plus or perfect, we definitely do work with a lot of businesses, and that's the whole point of SBA, is to help people who need it, who otherwise wouldn't get approved conventionally, to get the financing they need through the SBA guarantee on the loan that we provide. To go through in terms of things that we look for, I'll hand it over to Justin, because depending on the product, some loans are underwritten, the vast majority, but there are also paths within our lending where it's not necessarily a full underwrite per se. So Justin, would you mind sharing the 2 main swim lanes for our SBA financing?
Yeah, so ultimately we look at really 2 pieces. So we have what we would consider our streamlined swim lanes. So those are your smaller loan amounts. We take those through the SBA Express program. And so the underwriting criteria there is more minimal. However, the credit criteria that we would be looking for would be a little bit greater. In other words, we make it faster because we would look at borrowers who we're not going to do cash flow analysis on because they have excellent credit, both the business and the individual. The second lane that we would go through is what we'd call kind of our full underwrite. Keep in mind that having a few blotches on your personal credit, if well explained, don't necessarily preclude you from getting an SBA loan. That's the nice thing about an SBA loan is, in those larger deals, we get a 75% guarantee. And so where the United States government is in essence taking on 75% of that risk, it really encourages a lender to look for a loan approval, which is what we try and do underneath our SBA loan programs. When it comes to SBA financing, cash flow is king. The SBA loan program is a cash flow program. So it's meant for businesses that can meet cash flow either through historical financials or projections. So, I see we got another question in here. If somebody's buying a business, maybe you have revenue that's only $1,000, but you're purchasing a business that's got 300,000 in revenue. Is that an issue? The answer to that is no. We're going to look at the seller's financials, right? You're buying a business that's already got financials. The good news is if you're already in that industry and you're generating a little revenue, that experience takes you a long way towards helping get your SBA loan. So your experience plus the seller's financials really come together for a really great loan in the SBA world. So we actually love to see those scenarios where we could look in for a business that wants to expand by maybe buying one of its larger competitors, because the cash flow of that business will support the debt, and the experience that you bring to the market gives us significant confidence that you'll be able to run that business successfully.
I'm going to answer that next question. Do we do startups? The answer is absolutely yes. And what are the typical requirements for a business under 2 years?
Yeah, so we take startups actually both ways. So if you're looking for a small startup, maybe need 100,000 or less, 150,000 or less, we do have what we call a streamlined program, which means we're not going to go through the robust business plan and projection requirements. We're going to look more at what the credit history of the individual are, outside net worth, what they're bringing in to be able to approve that loan as a startup without having to go through more of the structured underwriting requirements. If you're looking for a larger startup loan, again, that's where we're going to look at projections as, kind of that piece to meet the cash flow requirements. And again, we're just going to take your projections plus your industry knowledge. And, we talked about, on a startup, usually you need 10% down payment, 10% injection into what your total project is. So the total amount to start up your business is kind of what your skin in the game is going to be.
And the next one is, if you could cover the loan thresholds. The question is, what are the loan thresholds for our express product versus a full underwriting?
Yeah, so ultimately the SBA Express program goes up to 500,000. We do our more simplified underwriting up to 250. Um, if you have absolutely no collateral, then it's going to be closer to 100,000. So there's kind of your step up from 100 to 250 to 500. It has some lesser requirements. The more formal requirements that apply to the SBA loan program, the 7A small program is dollar amounts from 0 to 350. That would be a full cash flow analysis, but the SBA gives the lender a larger guarantee. So sometimes, relating back to the earlier question, if we've got somebody maybe had some credit challenges, but we still see a good loan here, we may want to put that loan underneath, say, the 7A small program that gives us a larger guarantee in order to do it. When you get into the standard 7A program, starts at 350. So everything above 350 that's going to be on a term loan is going to be standard 7A, and that goes up to 5 million. There are several other specialized SBA loan programs that kind of blend in the middle. You've got your Export Express program, which is for lenders who export their products or services. So the SBA, offers, runs similar to the Express program, but they give us a larger guarantee, 90%, for those that are exporters. We've got a working capital pilot program, which is more targeted for large lenders who need a line of credit that's greater than $1 million, usually secured by their AR and inventories. We've got cap lines, which can be specific for builders, like home builders oftentimes take advantage of the builder cap line program. We also have the international trade loan, which there was a really nice enhancement made to that that went into effect 5 days ago for manufacturers and those that support our grocery supply chain, that will allow us to get a 90% guarantee on those loans. So really encourages us to make some really aggressive and reasonable terms for businesses that support that area. So there's a lot of different programs that come in. Ultimately, the best thing to do is to sit down with a banker who understands SBA lending, really talk through your business, what your needs, what your loan amount thresholds are, and then kind of guide you through, is it something that fits underneath our streamlined program, where it'll be a little bit quicker underwrite and due diligence, or something that would follow kind of the standard or small 7A loan programs that would require, full cash flow analysis, but could be met with projections and all the standard criteria that come along with it.
Justin, another question is, what if an individual has a bankruptcy and it's only a year old? Does this make them ineligible?
It doesn't make them ineligible, but I can tell you right now, from a credit perspective as a bank, it's very, very rare that I would see us lend to an individual who had a bankruptcy a year ago. So the SBA leaves it up to the judgment of the lender to decide whether or not it wants to make the loan based on a recent bankruptcy. For us, we generally want to see a little more reestablished credit history before we would extend another loan.
Great. I'm going to continue to leave it open for questions. I do want to make sure I share next steps and some things specifically about California Bank and Trust you may or may not know. The first thing is if you're interested in hearing more about SBA lending, our products, services, and options, I encourage you to submit your inquiry online through the link that's going to be provided, or you can email me directly and I'll connect you with one of our SBA experts here in the field that can meet with you virtually or in person in California. But California Bank and Trust, what really differentiates us? Number one, we're a bank that truly champions small businesses. And we know that small business is big business, and everything you do to contribute your services to the community goes back to growing the economy, employment, all the great things that happen by running a small, successful business. And what differentiates us? I think number one, you have a team of local SBA experts that are here to help you virtually, in person, by phone, or through our digital channel. Number two, we have very flexible terms. And an example of that is a lot of lenders you might see online typically have quarterly only rates. And as a business owner, you don't know if rates are going up. You don't know if rates are going down. We have the ability to give you options depending on the type of loan to potentially have a 10-year fixed loan, a 25-year fixed real estate loan. You can do a quarterly variable. You can do a, yearly, every couple years variable. Having options puts you in more control of your business. In addition to that, we have extremely competitive rates. Because we are a relationship bank and we are here for our business owners, we price very competitively. We currently have a 1.5% off the published rate. And if you look at the national rate of SBA loans compared to ours, you're going to see ours is significantly better than what you will find. And I encourage you, Google what are the average SBA rates across the nation and call us and ask us what our current rates are. Number three, as a relationship bank, you don't just get a loan. We will work with you every step of the way, from setting up your relationship, your payments processing, everything from how do I even order checks. If you want to start a business, but you've never owned a business, you've never managed a business, you don't even know how to open an account for a business, again, we are not just here for a loan. We are here to provide you the guidance and support you need to run your business day to day. And again, with the right terms, with flexible structures, with some of the best rates, I think, industry-wide. And Justin didn't mention it, but SBA loans in general take a little bit of time, but we're typically faster. The last I checked, anywhere from 5 to 7 business days than any other national lender. And all of those are just different reasons why I encourage you to have the conversation. And regardless if you're starting the business tomorrow, next year, you're already in business, we are here to help. Another question that came through was, I've asked a branch about SBA loans with no assistant at a time and went to another bank. Is it possible to meet with me directly? Depending on the project or loan request, I would defer it to one of my SBA officers. But I do look at 100% of the loans my officers touch in one form or another, and I am very aware of everything that's happening. If it's for that business specifically like you have, I have some personal experience with that, helping loans get through, so I would be very involved. But in terms of the day-to-day contact, I leave it to the expert because they would follow up on your file every day, every minute, every hour in the event you need something. I'll leave it open for another 30 seconds or so in case there's any other questions. And again, please take advantage of Justin Simpson's knowledge. He's our SBA administrator. He has almost a quarter century worth of experience in business banking and SBA. And we are a top 11 lender nationally. We're currently ranked number 12 in California by units, number 4 by brick and mortar. So we are absolutely here to help. Please feel free to ask any other questions before I wrap it up. Well, if we don't have any other questions, I do want to thank all of our hosts, which include Justin Simpson, our marketing team here in California Bank and Trust. I want to thank all of our associates and all of our prospects, all of our customers and potential customers for joining. We do have one last question. I'm completing the link. I'm looking to get the SBA loan not with CB&T. Can I still fill out the form? I don't understand that question, Latrice. If you email me directly, I'll get you in contact with whoever you need to get in contact to. Do we have any other questions? Well, with that said, I hope you guys have a wonderful day. Thank you for all that you guys do, and I will put my email in the chat so that you guys have it. Thanks, you guys. Have a wonderful day.